Today we're going to talk about commercial mortgage financing for a student resident. The key lending criteria for commercial financing on a student residence starts with location. Lender is looking for, is the location close to the school, close to the university? Is it within walking distance? They're looking at what are the vacancy rates. They're looking at maybe the supply and demand in the area. You may have some areas where, the students or the area is starving for residences, and then you have other areas where, there's plenty. So lenders usually keep up on that stuff. CMHC puts out guidelines, so they keep up on that. So the supply and demand is important as well. Lender categories for student residences, we could put them into three categories. Start with EA, and that is the low risk but a low rate. Things like banks, insurance companies, credit unions, institutional type financing. Now, they're low risk, conservative. They want to see maybe very little vacancy, somebody with lots of management experience. They would want to go lower loan to value, maybe have the mortgage insured by CMHC, Canada Mortgage and Housing. Now their rate's better, but they have less risk tolerance. Second category would be, let's call it a B. So B is a category of investment funds, maybe hedge funds, where they will look at deals and not be as they will tolerate a little more risk, but their rate will be a little bit higher. Things like they'll accept more vacancy. Maybe they will, if somebody does not have a lot of management experience or some minor experience, that they'll be okay with that. A benefit to B lender might be, well, they'll also maybe do a longer amortization on a loan. So where an A lender says, well, I want to shorten the amortization, but a B lender says, I'll go with a 25-year amortization as opposed to a 20, which helps out with cash flow. So there are benefits to a B lender as well. The last one, let's call it a C, is private financing. Private funds that could be from an individual private person or maybe from investment corporations, which is still private money, but usually for the larger deals, a private person doesn't have that much money, so it's more funds that step in and do that. Now the rate again is higher, but the tolerance for risk is also higher, and they'll do things quickly. They'll decide it. With private, it comes down to, yes, where is it located, and what's the vacancy rate and what's the cash flow. But they'll tolerate, let's say, for instance, maybe the building is, a 15 or a 20-minute walk, from the school. Where for an A lender, that's not acceptable at all, but maybe for a C lender, it is. So there are some benefits dealing with private lending as well. The application process for student residents commercial financing starts with a full application. The rent roll is required, list of vacancies. A lender would probably like to see what the history is on the vacancies. Some of these residences, although the students may not be there in the summer, a lot of them are rented year-round, even if the student's not there. So vacancy is important. They would also look at some type of a forecast. Maybe there's a feasibility study or there's a requirement study that's done as to what does it look like for the future for student residences. Are there more student residences going up in the area? Are they going to be more competition? So that's supply and demand. An appraisal is required, an environmental audit is required, and just an overall income and expenses. Timelines for completion on a commercial mortgage for student residents, usually about 30 to 60 days. Putting together, the application, going to the lender, giving them all the details, getting the details, putting them together. From the application time to the funding, can be done within the 30 to 60 range. It may get delayed or bring it into the 60 days by things that we're requiring that are out of our control. So we can all work hard at it, but if we need to go to another source, for instance, we need an appraisal. So if the appraisers are very busy, if that takes a while, we're waiting for them. We need an environmental audit done. That can take some time. Sometimes the financials, either one, the financials are not up to date, so we need an accountant to finish the financials. And then even sometimes, and this has happened sometimes in mid-application, where we're close to getting a deal and the lender decides that Maybe they want some interim statements, even though, the year end is still a far away or maybe 6 months away. So maybe some interim on how it's doing for the last 6 months. So there are things sometimes that can hold it up, but relatively it's 30 to 60 days for a, time of completion. The best approach for arranging commercial financing for student residents is to use somebody that has a lot of experience. There are a number of commercial brokers. I mean, I do that myself as well, but there are a number of commercial brokers that do things like student residences or commercial financing or retail. Somebody that has done that is more in tune with what the lenders are looking for, which lenders are prepared to do it. There may be some lenders that might have it on their list of things they do, but if I'm doing a lot of those types of deals, I know already that I don't go to those lenders. They're not really lending on it right now. Also, you need to be in touch with what CMHC is looking for to insure some of these loans. Number of lenders will do it, but they insist on them being insured if we're looking for A-type rates. So you need to be fully versed in what CMHC is looking for and able to get a qualified mortgage approved and insured by Canada Mortgage and Housing. If you need more information, give me a call, 416-464-4113, or send me an email. I look forward to speaking with you. Take care.